Onto your stock markets now. Asian markets fell today on concerns around poor economic data coming out of the United States. This despite some positive sentiment around the possibility that the US Fed may cut interest rates later this year. The Nikkei share average fell by 0.22%. The Hang Seng index rose by 0.22%, while over in mainland China, the Shanghai Composite Index ended the session up 0.41%. In the United States, markets were a mixed bag. Technology stocks firmed up, while energy companies dropped following a negative manufacturing report in the United States, reviving concerns around a possible recession. The Dow Jones Industrial Average declined by 0.3%. The S&P 500 rose by 0.1%, while the tech-heavy Nasdaq closed up 0.6%. And then the JSE is weaker today, with the all-share index falling over 1% at 76,901 points. The industrial 25 index is off 0.2% and financials 1.6% in the red. The rand is trading at 18.69 against the US dollar, 23.83 against the British pound, and 20 rand 31 against the euro. Looking at commodities, gold is trading at $2,329 and platinum at $1,011 per ounce, while the price of Brent crude is trading at $76.98 a barrel. Well, for more on the markets, I'm joined by Makwe Masilela. He's the Chief Investment Officer at Makwe Fund Managers. Thank you very much, Makwe. So how are you viewing or reading the markets today?
No, it's just so unfortunate that so far we have managed to give back all the gains that we made yesterday. And the issues here are the data that is coming out. We've seen the data coming out of the US, that is their manufacturing. As much as that data was weak, it is starting to increase the bets that yes, the economy is not doing that great. Then as a result, we expect to see interest rates going down in the US. But unfortunately, there's starting to be a concern that the very same weak data will definitely put a drag on other economies. And we know that for this week, the highlight other than the job numbers from the US, we've also been looking ahead to what is happening with the European Central Bank, where we expect them to cut interest rates. But so far, people are starting to think that, hey, look what happened on Friday. The inflation number was slightly up, so that probably might affect the decision that needs to be made on Thursday. So markets are kind of worried about we might not start getting those interest rate cuts that we've been expecting. And we know that investors will continue to weigh data coming in showing how strong economies are doing, also against expectations of when can we start expecting the first interest rate cuts.
Yeah, so with oil prices, they've come down quite substantially, way below the $80 a barrel mark. This is good news, of course, for countries like South Africa, because we're major importers or net importers of crude oil. But what are the fundamentals behind what's happening with the oil price?
You know, currently we know that OPEC and their allies, including the likes of Russia, they're cutting almost 5.86 million barrels per day. That amounts to almost 5.7% of global demand. So the guys agreed that will allow the cuts to carry on. But as from October this year, they will start now to up a supply. So now the concern is you start increasing supply while economies are worried about the growth. So you might have an instance where there's more supply but there's no demand. So that itself should be negative for prices going forward if that gets to materialize.
So a counter that usually is correlated with the performance of Brent crude oil is Sasol. Sasol has been a darling of many investors, and not that long ago it was trading around 300 Rand per share. It's now trading around 110 Rand per share. What's going on with this particular stock, and should people who hold this stock panic or what?
I think it's worth panicking. We know that they don't just make most of their money from oil, but most of the money is coming from chemicals. But unfortunately, there's a positive correlation, between the demand of chemicals and oil. So if oil prices are not doing that great, then you'll expect chemical prices as well not to do that well. But also of concern specific to Sasol is that we know that at some point they wanted to raise money by doing rights offer. And we know that if you start doing rights issue, that's dilutive in their nature, but they stopped there. that because they sold most of their assets to pay down the debt. The point we are trying to make here is that should the guys not improve their earnings because of oil and chemical prices not doing that great, then one can start to think that maybe they might revisit that idea of a rights issue. So yes, as a holder of the stock, I think you've got the right to be worried, to think that will this thing ever turn around again? As you said, at some point it was just trading around 300. Now you're just talking just above 100.
Yeah. So I see Canal Plus has made its final offer for Multichoice at 125 Rand per share to completely buy out the company. What happens now? Is that deal more or less a done deal now?
It is more or less a done deal, as we know that the guys accepted that 125, which they had to improve at some point, but the Canal guys were clever, buying most of the shares, on the market and off the market, paying less than 125, so there was some decent saving out of that. But yes, you're right, it's more of a done deal more than anything. But if I'm not mistaken, the guys they said they might still keep Multichoice to be trading on the stock exchange. I hope I'm not wrong about that.
All right. And one last thing, we're running out of time, but RCL Foods, they came out with an announcement today to say that they're going to be spinning out their business, their rainbow chicken business. Just quickly tell us what that means, particularly for shareholders who hold RCL.
For every share that you own of RCL, you'll get one rainbow share, and I think the guys are expecting that to start trading on the 26th of June. So for them, it's just more or less of trying to unbundle and make sure that rainbow itself is sustainable on its own, so that it doesn't get to be affected by other divisions of the business. And by the way, it doesn't require shareholders' approval.